Hello and welcome. Is the global economic downturn proof that the Western-style capitalism has failed? Countries like China and India practice what's being called state capitalism, and they seem to be emerging from the crisis stronger, both economically and politically. Critics of the Western model say that the ongoing financial crisis has highlighted the flaws of capitalism and damaged the reputation of the free market. Countries that have remained relatively unscathed are those that usually have authoritarian governments pulling the strings behind corporations and financial markets. On today's show, we look at state capitalism versus free market capitalism and ask, what are the risks and benefits with each, and which one will dominate the future global economy? You can join the conversation by calling into the show with your questions and comments. You can also send us an SMS or an email. With me in the studio today is Ian Bremer, the president of Eurasia Group, a leading global political risk research and consulting firm. His new book is called The End of the Free Market: Who Wins the War Between States and Corporations. In it, he examines the emergence of state capitalist nations and their relationship and potential threat to free market economies. Ian, good to have you on the show.
It's good to see you again.
It was a pleasure. Now, let's start by defining state capitalism. I know you more or less have sort of coined the phrase for the book, though you say it dates back, a couple of centuries, and although the idea of it dates back a couple of centuries to, I guess, the German social democracy system, is it?
Yes, and mercantilism in general, as we saw emerging out of Europe. But of course, this is a bit different. We're talking about authoritarian states that have, in many cases, come out of the centrally planned economic framework, recognizing in globalization that their populations have a lot more say, a lot more sophisticated, and they want growth. And so they're using the tools of the market, whether it's corporations or whether it's institutional investments, so sovereign wealth funds, state-owned enterprises, privately owned national corporations, all of which are basically using the markets for ultimately political purposes. I'm
going to describe some of the things you've said about the particular traits. Now, you talk about three particular traits to state capitalists, and we can go through these now. One of the first traits, or the first trait perhaps, state dominates market by owning major corporations, as you say, and industries that compete internationally. Another trait, state capitalists see markets as tools that serve national interests. You were mentioning that, and not as economic opportunities for individuals. And thirdly, state capitalists use market to extend their own political power, both domestically and internationally. So let's examine these sort of individually. You've touched on them there, but in the first instance, how do these major corporations and companies that the state owns differ from nationalized industry?
Different from nationalized industry?
In the sense that, if it's basically under the auspices of the government, it's in some ways almost like a nationalized industry.
That's right. Yeah,
so in what way is it disguised? Is that the idea?
Well, sure. And again, you have the fact that you are a corporation in a state capitalist society, in the absence of rule of law, where the state is the principal actor, makes a very big difference. So if you think about the Google problems they experienced in China, they weren't fighting against a state-owned enterprise. They were fighting against Baidu, which was a privately held company. But it was a privately held company that was preferred by the Chinese state in the absence of rule of law. And so from the perspective of Google, it didn't really matter. That is the nature of state capitalism.
And in what way can those state capitalists influence markets? In what way can they really affect the markets? I mean, beyond their own borders?
Well, they do it both domestically and internationally. I mean, if you think about Afghanistan, so just recently we had this big New York Times piece, $1 trillion of resources underneath the ground in Afghanistan. And a lot of people were saying, well, that's a good reason for the United States to stay because, they're going to have access to all this stuff. Well, the only major investments happened in Afghanistan so far, $150 million in copper coming from China. Now, it's behind schedule, but why China? Well, because if a Chinese company is making an investment, the Chinese government, along with them, is actually providing direct industrial support. They can build out the infrastructure and the rest. The U.S. doesn't have that sort of industrial policy. Frankly, none of the Western developed states do.
We had an interesting email that came in. We had a few that came in for you, but this one's from Pakistan, from Mohammed Hussein, who says, is corruption more prevalent in state-controlled capitalism or free market capitalism?
Look, I think corruption is prevalent in all sorts of countries. There's corruption in the United States, there's corruption in Russia. Certainly Russia's one of the worst of the state capitalist states, and there are many times that we've seen a lot of endemic and institutionalized corruption in developed countries. Having said that, in a country like the United States, you have a level of transparency. You have much more open media that isn't controlled by the state. The stuff gets out. And lawyers. You have rule of law. If you have a problem in the United States, ultimately, folks are going to get litigious. Sometimes they're overly litigious. You have a problem in Russia or in China, don't bother getting your lawyers. You fix that problem with the state or you're out of the country. So, on balance, we have to recognize the difference of transparency and rule of law is a meaningful one.
Now, it's interesting in your book, you focus on a number of nations and sort of groupings of nations, and you put a lot of focus on China. That's a very heavy theme in the book. And you say in the book, China has become the symbol of state capitalism's power, and it is China that will determine how long this trend survives. Now, is that a function of China's economic size, or is it its particular model of state capitalism?
Well, I think that if you think about all the countries that are succeeding as state capitalists, you talk about the Saudi Arabia and the states of the Gulf, you talk about Russia, you talk about China, all of them do share something, which is that they have extraordinary access to natural resources under the ground or on the ground that they can take advantage of. Could be different types of scarce commodities, oil and gas, or extraordinary cheap labor. So I don't think it's that the model is so fundamentally different, but the size of China. Ultimately, the inefficiencies of state capitalism in China are going to take decades to play themselves out. And in the interim, you have 30 plus years of 10% plus state-directed growth. The Beijing Olympics, the Shanghai Expo. And keep in mind, I started my book and I titled my book with this question that I got from the Chinese Vice Foreign Minister, He Yafei, who starts a conversation with me saying, Ian, now that the free market has failed, last May, has failed, what do you think the appropriate role of the state in the economy should be? I think we need to address that issue as a nation and globally.
Let's compare China with say, the UAE and Dubai in particular. I personally witnessed Dubai sort of growing in the early start of the millennium, and then suddenly everything seemed to turn upside down.
Right.
What went wrong with something like Dubai, where the focus seemed to be on growing the nation effectively?
Well, yes, but of course, keep in mind that the big difference between China and Dubai is that so much of Chinese talent is homegrown. You look at the engineers that are coming through that system right now, they're just being cranked out at world record levels. In Dubai, everything comes from outside, except for a very small group of Emirati citizens that often have control, but aren't necessarily enormously well educated and don't have the management expertise to actually run these things. And so they were very great at marketing themselves, and they certainly understood how to talk their book, but they didn't have the indigenous capacity to build every sector at the same time. Looked really good when the world economy is going gangbusters, but suddenly when they met problems, the brand still looked very solid, but they didn't have anything underneath. And so who's bailing them out? The much more cautious, much more stable folks in Abu Dhabi, the place that we should have been betting on all along.
The interesting thing is there are those who might argue that having some kind of benign dictatorship, as some see these state capitalists, is a good thing because it allows for a solid growth. It means people are in line. Singapore, often Malaysia, these kind of countries are often quoted as nations where if it wasn't for that kind of authoritarian, autocratic leadership, there wouldn't have been the kind of growth and sustained development that we have seen.
I think if it weren't for state capitalism in China, you wouldn't have the same level of sustained growth. But I think what we need to recognize, in a properly regulated, even a properly regulated free market economy, and we've had an improperly regulated free market economy in the US for quite a while, you still end up with lots and lots of bubbles, lots of volatility, and people get hurt. In state capitalist societies, you smooth that out. The state, by taking on the role of being the principal actor in the economy, gets rid of those bubbles. But the expense is that it pushes a bigger bubble farther out. So the unsustainability of what China is doing is going to be much worse. There is a bill to pay from an environmental degradation perspective, from a lack of labor productivity perspective, from the inability to innovate from an indigenous perspective, in terms of the growing fight that we see every day between the United States and multinationals in the West. These things are coming, but it is the world's biggest bubble, and I know what happens with big bubbles as they're growing. We all want to get on. So let's, this is where I see state capitalism going.
Where does it leave the population? Do these state capitalist nations, or say the model of state capitalism, tend to be more favorable to the individual individual member of the population, as opposed to, say, the sort of the wild west of a capitalist free market capitalism, where it's sink or swim?
Look, I think in the short term, there's no question that because you're avoiding that level of volatility, you can certainly show for emerging markets and certain levels of development very strong levels of growth. And I would not be trying to argue that what we need right now in China is for them to jettison their state capitalist model and bring on a free market system. It's kind of like Churchill used to say about democracy. It's the worst system out there politically except for all the others. Well, a properly regulated free market system may well be the worst system out there except all the others. But I know what happens when you impose democracy on a country that has no capacity to deal with it. It can be much worse. We see this in Afghanistan. What happens if you try to impose a regulated free market on a country that has absolutely no capacity to deal with it. It would be vastly worse. And in the case of China, which the United States desperately needs, it's a very codependent relationship. No matter how you may feel about Beijing and what they're doing, no matter what kind of values you may or may not share, we need these guys. And so we don't want them to fail.
Let's get a call in from Turkey. We've got Turkey on the line. Halil, what would you like to ask?
Well, I would like to ask, do you think is it a better idea to keep gold as a reserve rather than keeping euro or dollars as a reserve currency? Do you think is it better to keep it gold so that we can avoid fluctuations in the economy and avoid future crisis maybe?
Well, I think that, given the fact that gold is driven by such amounts of investor fear and psychology, and so there are massive swings in the commodity price, I think it's vastly more dangerous certainly for individuals to do that. You don't want to take that kind of exposure. And I know the Indian government has been moving more of their reserves into gold and into hard commodities across the board, but still it's at the margins. I think we have to recognize that in today's world, it is the U.S. dollar. The U.S. is by far the strongest or the least weak of the developed states compared to Japan, compared to Europe. It's got scale, it's got indigenous innovation and the capacity to continue that. It's also got favorable demographics. So much as the U.S. is perhaps not as good or an attractive a bet as it was 5 years ago, even 2 years ago, it still is the bet to make.
Is that going to sustain? Everyone says the dollar's sort of come to its end, the end of its life.
Well, I mean, people also say that it's the Chinese century, and I don't understand what that means. First of all, there aren't centuries anymore. And second of all, the Chinese, as of last month, have over $900 billion of U.S. Treasury reserves. By their numbers, that's the largest that they have ever had. Now, my general view is, you can listen to what politicians say. I like watching what they do. And if that's where the Chinese are actually making their investments, and they're the fastest growing economy doing pretty well right now, we might want to listen to that.
All right, Ian, lots of more questions for you. We're going to take a very short break here. When we come back, we'll discuss what role state capitalist nations might play in the future global economy. We'll be right back. Welcome back. We're looking at the growing power of state capitalism, a term coined to describe the type of controlled capitalism practiced mostly by authoritarian nations. How do they interact with and perhaps threaten free market countries? Joining me in the studio is Ian Bremer, president of Eurasia Group, a global political risk consulting firm. Let's get back to our chat, and let's just have a quick look at India, because for a lot of people, India, they'd say, well, India doesn't seem to be an authoritarian country. I mean, the world's biggest democracy.
Yes.
So where does it fit into the state capitalist picture?
Look, I think it's very, very clear that to the extent that India has challenges, it doesn't come from the state being too strong. It comes from the state being incredibly fragmented and a massive decentralization. Now, it is true there are lots of pressures on India to go into a more state capitalist direction because, as the country grows and they become more resource intensive, they're getting their lunches eaten by the Chinese. After the war in Sri Lanka, who locked up all of the contracts immediately and a military base? The Chinese, even though the Indians had these cultural ties. In Africa, in Central Asia, in all sorts of parts of the regions, the Indians are not able to really deal with that. And so, there's going to be an effort for the Indian government to take more control, but their ability to do that, given the extraordinary fragmentation, the almost surfeit of democracy that exists in the Indian system, means that they're really not going to be moving in that direction very fast.
Well, let's get another email question to you. This one came in from Naresh Koch in Kenya, who says, the global financial meltdown proves that the free market failed to regulate itself. Thus, government-controlled markets will be dominant for years to come as the government tries to avert future crises. So in what way do you see free market governments being vulnerable to these manipulations of the state capitalists?
Look, I think that, first of all, your questioner asked a very, very important point, which is that in the last 20 years in the United States, there has been a failure. The government has taken its eye off the ball. Now, is that a failure of the free market? I say no. And one of the reasons I say that, and this is something fairly controversial, but I think it's very clear, that if you go and talk to a CEO of a corporation or the head of a major bank and ask them honestly what they want, they don't want free markets. They're not interested in free markets at all. They want subsidies. They want monopolies. They want to maximize their profit for the short term, for their shareholders, and for their own compensation. Goldman Sachs, BP, American corporations throwing technology in China, not caring about the long term. Now, does that mean that the free market has failed? No. It means that in a free market, the multinationals are the most important economic players. We don't want the government owning those companies, but you do want them actually playing a role in regulating them so that they have to have a level playing field. They must compete against each other internally, domestically, and internationally. And frankly, in a bunch of sectors in the United States, whether you're talking about financials or oil or others, the U.S. has simply dropped the ball. I mean, Greenspan is a villain in this story. There's no question.
Well, you mentioned about China being, this century's China century. A viewer wrote in, Angeline Coe wrote in to our Facebook page with saying that this century is China's century. There is no doubt that China's power and influence will grow, but state-controlled capitalism perpetuated by its leaders will not be studied as a model of economic success. So to what extent is that capitalist, state capitalist model viable in the long run, in the sense that, is it much more, is it, certainly at the moment you say it's reasonably viable, but in the long run you feel it's definitely not going to work?
In the long run, I think if the free markets end up going down in the long run, it will be because we've destroyed them ourselves through protectionism, through closing borders, through not allowing in immigration. I mean, the sorts of things that you expect populations to do when they're hurting, when they're facing 17.2% unemployment. And it takes a very brave leader to stand up for free market principles in the face of that. But do I believe that state capitalism works in the long term? Look, we're facing incredible challenges, particularly in terms of climate. We're facing challenges with nuclear proliferation. We're facing challenges in terms of fragmentation of intellectual property rights and other things that are going to make global economic growth rates reduce. We know that we in the Americas, in Europe, can't support. We won't have the credit. We can't buy what we used to. So if there are people out there that think capitalism is unsustainable because we can't continue to buy this stuff, you've seen nothing until you've seen state capitalism. China needs to grow at such greater rates in a much more constrained environment, not only to ensure their economic success, but to ensure their political survival. And over the long term, that's the biggest bubble of all.
It's interesting, you touch on this in your book, the state capitalist model being copied by some of these developing nations. And I wonder to what extent is it an economic model that's becoming increasingly popular with non-Western nations that want to be part of the international system. How is it an easy entry for them into the global circle, if you like?
There's no question that in a G20 world, as opposed to a G7 world, where there isn't an overarching governance, that the success of state capitalism, success of China in particular, gives lots of emerging markets, as well as despots in lesser developed states, the ability to say, aha, here's a model. But let's be clear, the fact that they're using this politically, in the same way that some members of the right use what's happening politically to say Obama is a socialist, doesn't make it any more real. And we're not going to see a Beijing consensus, because state capitalism is ultimately a one-state solution. If Beijing is promoting a solution that supports China, and it supports its companies at the expense of other companies when there's competition. So unlike a free market Washington-style consensus, which may only benefit certain sectors of classes, but it's transnational, this is one that really supports one country. And you can see client states that are completely dependent on mainland China, like Taiwan, and we'll see that in Vietnam, we'll see it even in countries like Indonesia, maybe even Australia, but you won't see the Indians or the Russians or the Brazilians suddenly saying, aha, we want the Chinese model, because frankly, more statism in those countries will bring them into greater competition with China.
Let's get a call in from Pennsylvania here in the USA. Ray, go ahead, please. Ray, you there? I guess we haven't got Ray at the moment. We'll try to get back to him if we can. Let me get another question here that we can. A quote from your book where you talk about China's expanding role. Now, with that expanding role, you write, in the end, it is much more likely that the Chinese leadership will have to reconsider core assumptions about government's role in the economy than that the leaders in the United States will retreat fundamentally from free market principles. Saying basically free market's going to one that keeps its head above water. Where and when would you expect to see cracks in the system, in the state capitalist system?
Well, I think you and I were talking in break about Dubai and the fact that because Dubai had very little propping them up except another emirate, Abu Dhabi, it cracked much more quickly. Venezuela needs $85 oil or they start running a deficit. It's going to crack much more quickly. in China, with 1.3 billion people, I mean, you're starting to see major demonstrations in Foxconn and other industries that are on the coast where they're making $5,000 per capita. But the interior of that vast country is still completely underdeveloped. And the
fact,
it's the
inequity of it, basically.
It's the, yes, and so in the United States, the fact that in the last 2 years the free market has taken such a hit gives the Chinese government a much greater run-up. I mean, let's face it, the average Chinese is much happier with their government today than the average American is with the American government. And so this is not a 1 or 2, even a 5-year issue for me. It's much more 10 years plus.
Well, let's get Ray back in from Pennsylvania. Ray, go ahead.
Yes, can you hear me now?
Yep, go ahead, please.
Yes, I'm an Iranian American, and I follow the Iranian economy closely. And in regards to the state capitalism, one brand of it is what's happening inside Iran now, which is very corrupt, actually. It's the revolutionary course and the government controlling major sectors of the economy. But the dilemma facing the Western governments right now in terms of the embargo is that if you boycott such an economy, would you hurt the ordinary average Iranian citizen, or would you be hurting these, I would say, the mafia powers?
Ray, we've got about 45 seconds, so let's get in a chance to answer that.
We've just had the 4th Security Council resolution, and this time something different happened. Brazil in the Western Hemisphere and America's NATO ally Turkey voted against the U.S., voted with Iran in opposing those sanctions. The rise of state capitalism and the fragmentation of global governance in the G20 means that countries like Iran increasingly have other options. And that means that whether or not you think that sanctions are effective, they're increasingly going to be very, very difficult to actually implement.
Ian, thank you very much for discussing this. I have a whole list of questions, but we haven't had time, so hopefully we'll get you back and talk more about this.
Riz, my pleasure.
My pleasure. Thank you very much.
Yep.
Thank you for being with us. Now, you can watch podcasts of the show on iTunes. This week, we're featuring a discussion with Afghanistan's former finance minister and presidential candidate, Ashraf Ghani, on the recent Kabul conference and how Afghanistan can move forward. On the next show, Kenyans are preparing to vote on a new constitution, but how will the referendum help to bring the country together, or could it lead to further divisions and possibly more violence? Be sure to tune in for that and send in your questions. Until then, from me and the team, goodbye. We'll see you next time.